So Bitcoin hits our target range, yet this was just a coincidence. In this video, we're going to be jumping down into what has been going on most recently with the BTC, price action, and what I think is likely to happen next. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. It is the first place that we go to notify you of everything that's going on in the crypto space. Let's just jump right down into this one, right? So here we have Bitcoin paired up with USDT. We're on the BitGet spot exchange, and it's the 1 hour time frame. This is the chart that we use for smart money concepts, but we did actually draw a little bit of Elliott wave on here yesterday, showing this kind of targeted range at the top end at 30,799 to 30,882. Now, the reason that this is actually an invalid wave count is that we moved down deeper with our wave B, and it is not correct to think of this as an irregular flat correction. It doesn't have the correct structure for that. So we know that actually this move to down here was basically a liquidation event. It was basically designed to liquidate all those long positions before taking the price up higher. Okay, now if we were to break this down on that structure that I had, we were looking obviously at a move up here to our targeted range, but it would be a coincidence that we actually hit this level using that particular wave count. Okay, and the reason for this is we actually move down like that before we start to move on up, meaning that this entire structure here is very corrective. In fact, we could probably even argue that it was done like this. In fact, that there would actually be a much better wave count overall. This puts us in this move to the upside not yet being complete, because we'd have to look at this entire move here as an A wave, down here into a B wave, and then pushing up into a C wave. So knowing these things, if I'd go ahead and just kind of pull this on here with a fib chart, taking our low over this side, then our new targeted range, if I can go ahead and move this up a little bit higher, comes up significantly higher in the price chart. Okay, so if I can grab my yellow box I want to move, there we go. We have this range just up here. This is where we're going to be targeting, okay? It's basically 31,418 to 31,717. Now, for this particular wave count to work, we have to see the structure as such, right? Down here is a giant A wave up, this is a B wave down, and we've got to come up here into a C wave. Okay, now this is going to be a bit of a challenge. It's not something that's going to happen right away, and we do have problems with our current structuring down here. Okay, this is a very overlappy corrective structure. This doesn't give us strong momentum being indicated to the upside through an overlapping structure like this. It shows us that we're very choppy, very much that the market can't make a decision as to kind of which way it wants to go in any particular strength. In fact, if you kind of remove some of this clutter off the charts here, we go ahead and just remove the wave counts as well, you can kind of see that all we've really been doing is stuck in this little tiny range just here. Now, the issue that we do have is that there is the typical kind of structures that are going to break down rather than break up, at least on these 1 hour time frames. So let me show you, right? So for example, over here we had the higher highs and higher lows, okay, and over here we have higher highs and higher lows, right? In fact, that could probably expand out a little bit further. I'm not going to draw these overly neat. I'm just going to kind of show you what they kind of look like. And we have something similar over here. Not as steep, of course, but you can kind of see every time we've gone this, we've had a correction, a sharp one to the downside up, and then sharp one to the downside. We can argue that even if we pull this in down here, we have this one kind of playing out as well. It's much, much larger because it actually would be more like this, which means we still have the ability to kind of go up to that targeted range, but it makes it quite difficult. It's very different to how these ones were structured out initially. Okay, so it'd be one of those things that we're going to keep an eye on, see how it kind of plays out, try to neaten these up if I can. But for the most part, my concerns are that we will potentially be seeing a big break to the downside before we have that chance for a run to the upside. Okay, so we want to be a little bit cautious. These things you can see over and over and over and over again. And of course, you know, we are getting ourselves into a much bigger run to the upside, as mentioned previously, by going the opposite direction. Okay, you can see this kind of range market that we're in right here, where we're into lower highs and lower lows. These ones are the ones that are going to be breaking us upwards, but it is something that's going to be more of a ranging market because it's very, very subtle in the way that this one's playing out. You can kind of see it there, right? We have a lot more of these kind of steep movements, steep corrections, and bouncing ranging market rather than we have a nice, healthy correction to the downside that gets that break to the upside afterwards. So I still think we have that potential to move up higher. Our targeted range is here. We can see it, 31,400 to 31,700 approximately, give or take a few dollars here or there. And you can kind of see that being the range that we're going to be targeting out. Okay, so that's going to be the move, but for that move to play out, we're probably going to have to see a few corrections in place as well. So i.e. We'll come up, we'll come back down, we'll come up again, for example, this kind of stuff. Now it's possible that this could be a impulsive ending and we do something to this effect, so we can't rule that out either. We could have a diagonal at the beginning here, so you know, lots of different options for how we kind of get up there, but it's interesting that we're there nonetheless. Now let's kind of just delete some of these off of here for a second, right? In fact, actually I will leave the yellow box because that's our targeted range, but I will remove these little parallel channels. Now the other thing that you can see is this fair value gap at 30,202 to 3,381. If we jump over into BitGet, we go over to the trade section, we go to spot trading Bitcoin USDT. This is going to load up the same chart as we're just looking at, only it's going to load TradingView in BitGet directly, right? And so we can see the fair value gap over here on this 1 hour time frame. Let's go ahead and just draw it in. It's under this this one here. Okay, so you can see this fair value gap right in here, and of course, let me go ahead and let's see. Can I get this to go yellow? Yeah. This one's being completely filled out, okay? It's being filled out because we've moved down. So that wick that moved down on kind of all that buying pressure took out the fair value gap. This one here has also been filled now. So we can go ahead and just make that yellow as well, right? So these two fair value gaps have been filled. We can see that we tapped into this lower run, but it hasn't yet been filled out. And you can see these in here as well. These are more your daily time frame fair value gaps, but these hourly ones right up here, they've been grabbed and completed now. Okay, so it's interesting because we often say that, you know, when you see these fair value gaps that they get filled out, and the fair value gap in itself is created from the order books, the imbalances of the order books, too many large orders, and they're not being filled, as in there's not enough liquidity to complete those orders, and therefore price has to move from one price range to another in order to complete it. And as such, it leaves behind fair value gaps, right? So the imbalance in the order books creates these imbalances in price, which create these gaps, and then price wants to come back down and put liquidity where liquidity was not. Essentially, these gaps in the price show you pockets where there was illiquidity, where there wasn't any liquidity. Okay, so it's interesting. And so you can look at the BitGet order books here, and you can kind of see where they're likely to get created because you can see the size of the orders, and you can see where there's imbalances in there and all that kind of stuff. So really interesting kind of stuff, and obviously price here has wicked down into it, grabbed that fair value gap, then bounced to the upside. So all in all, very interesting kind of day yesterday for Bitcoin. So we obviously have our targeted range a little bit higher. We've completely filled out the fair value gaps on this one for BTC. So interesting. Now, if you are not yet signed up, or if you haven't yet signed up to BitGet, why not check it out? The affiliate link is in the description down below. It's always great to have access to more exchanges because you just never know what's around the corner. Your favorite exchange may not be there, you know, in a month's time or whatever, due to bankruptcy or whatever, right? So it's always good to make sure you have access to multiple different accounts. I use BitGet. It's a really good platform in my opinion. I use it for all my leverage trading, 90 to 95% of my spot trading, and you know, I'm not disappointed. And you know, it's one of those things where I didn't think I would transition away from Coinbase and Binance the way that I have done, yet you know, here I am, and I can categorically say that I haven't used Binance in months, and that's an interesting thing to say because I like Binance. I still think they're going to do incredibly well, and hopefully that they survive with everything that is going on. But in terms of risk management right now, it's always good to have access to more exchanges and utilize more exchanges and all that wonderful stuff. So if you haven't yet signed up to BitGet, why not check it out? Affiliate link is in the description below. If you do use that link, you can take advantage of some fantastic offers and rewards, up to $8,000 of deposit returns and rewards, and depending on how much you deposit and how much you trade, you can earn a lot more rewards that way. And of course, if you do use that affiliate link, you can join us down in our Discord server where we run weekly competitions for all of our signups and all that wonderful stuff. Again, worth checking out both the Discord server and the affiliate link for BitGet. Let's jump down back to the charts. Okay, so knowing that we kind of grab the fair value gap, I can delete it from this chart here, and we have our targeted range here. This kind of gives us an idea of kind of where Bitcoin is heading and all that wonderful stuff. Now, if we jump over into our daily time frame here, let me just get rid of that. We can see that obviously we had the lower highs and the lower lows when we broke up from there. We had a very similar situation just up the top here on the daily time frame as well. You can see that it's not overly massively impacted just yet, but you can see that we are outside of the range of where we were previously, as in we are still technically in lower highs and lower lows. We can see that in there, and it's actually getting maybe a little bit neater here now, and as you can kind of see, this will eventually have that break to the upside, where I do anticipate that we move up towards the CME gap, which comes in on the $35,000 range. You can see that one right here, 34,455 to 35,180. I still think that's somewhere that we're heading. It just might take us a little bit longer before we get there. Another CME gap that I think we'll have to get filled in the future will be the 20,330 to 21,110. Unpopular as that may be, I think that is the direction that unfortunately Bitcoin is likely to go. You cannot continue this run to the upside without a major correction to the downside. So far, we haven't had any major corrections, and I think as soon as the Fed pivot, that is where we come down here into these lows, and that's where many altcoins hit new lower lows and all that wonderful stuff. Okay, now Bitcoin, as I said many times before, it doesn't technically have to have a new lower low. However, I suspect that it is possible that it does. A CME gap is visible at 9,735 to 9,925. Now, not only do we see large players not really participating in purchasing BTC, and it's really just retail investors, we also see a CME gap all the way down here. So we can speculate, it's not a guarantee, that maybe price will move all the way down to that CME gap as we have some kind of massive catalyst for downward pressure on Bitcoin. That being said, all the ETFs that are going on, everything that's going on with the SEC, I think it's possible that we don't have a new lower low for Bitcoin. Many altcoins, though, will have no choice but to hit new lower lows, as Bitcoin will have a healthy correction, which will drag many into new lower low positions. That being said, Bitcoin could hold strong depending on how these ETFs go and all that stuff. Again, we are seeing the cusp of change for large institutional investors, allowing retail to kind of jump in and all that kind of stuff. So it's going to be interesting to see how things change. When the Fed pivot, there will be an almighty crash in the market, but that does not necessarily mean new lower low for Bitcoin. However, we can see here that there is a path potentially down to these lows. We have to be very cautious, yet follow the structure and follow the market sentiment closely as time progresses. I'm going to leave the video right there, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new, subscribe. If you haven't yet joined us in Discord, check it out. Link is in the description below. Until the next one, though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.